Good morning, everyone. It's 10 to 10 on Thursday, the 8th of October. I'm looking at the spot gold market, and as you can see, the market pulled back with the stock market a couple of days ago and is doing its best to get back above 1900 again. There is a very interesting level on this chart, which is this low, and as you can see, the market came down and took out any liquidity that was underneath this point to the left. I was hoping that that was going to in fact cause this market to move up strongly, and that certainly could be the case, but unfortunately, folks, we have to also think about one last drive down to this fib level at 1824. That would be 1825, give or take a tick. That in fact would be the 61% retracement of the last range. So what to do here? Well, that's what can easily happen down to there before we see something like this. Trend is certainly in place, but could quite easily have one last move down here before it moves back up again, and clearly that would cause a great deal of trouble to gold stocks. The only position that I bought in this particular campaign was I'm long of the GDX from that outside day. There's an outside day there, and a down candle, two doji indecision candles, and then the outside day. So I bought in, I suppose, on the 29th of September into the GDX, and I'm still holding that. The stop loss is still where it started, somewhere down around here. So if the market did pull back to this 1826 level, I would be stopped out of that. Big deal. So what to do? Well, I think that folks, if we see a close above 1922, then this would confirm that this low is in fact in place. That would be a 1, 2, 3 reversal. So I think if you're not in, just do your best to sit in your hands and wait for a close above 1922. That then would in fact confirm a high probability trade that could take us up to the 2200 level. So that's what I think you should do. If we have a look at some gold stocks themselves, the big fellow is Polymetal, and Polymetal seems to be in fact confirming a base at that 61% of the last range. We had 5 waves up here, we've had 3 waves back. Hopefully that'll hold it, but certainly if gold comes back to that 1826 level, then Poly will pull back to that 78% level of the last range. It's certainly been trading at the 62% level for quite a long time, and as you can see, an awful lot of shares have traded at that particular level from May this year. So it looks as if it can hold above 1922, that close that I spoke about. Then I think that Polymetal should be accumulated. If we put the value line on, we can see the VectorVest valuation hugely up the page. We take volume off and put on earnings per share. We can see that that earnings per share is growing strongly indeed. So looks to me as if that there is a high probability low risk trade just about to fire on Polymetal. As you know, I got stopped out of it last time around. And I bought in just at these lows at 1900 and somewhere about here, and of course when it dropped I got stopped out of that. So it wouldn't be the first time, it won't be the last time, I assure you. So if we also have a look at a very favorite share of mine, Pan African Resources, I know the mine well, I know the ore body exceptionally well from a previous life. As you can see, earnings per share is rising strongly here, and it's trading sideways in a flag pattern, significantly undervalued. And similar here, folks, if you see that gold market moving up, closing above that 1922 level, I think that if you see a breakout of this flag, that we can quite easily get to that level. If we put this up over a yearly chart, we can see that this bit of the flagpole should in fact be repeated. And that's a move from 10 to 30p. Add to 55, that would take that up to 50 pence odd. So there is as I say, a high probability, low risk trade setting up here. But I have to remind you all that it is gold, guys, and gold has got a temper on it. These are not worry-free shares, I assure you. And this is Caledonia. I think that we have in our VictorVest user group, Johannesburg based, we have a gold mining man, and he tells me that Caledonia in Zimbabwe has got the lowest cost of all the mines that we look at, and valuation in this is right up there at 30. It's trading at 13. Earnings per share has grown, flattened off a bit, I know. Nevertheless, if I get rid of the value, we can see that this is pulling back in a falling wedge pattern. And there's also a very important line of previous resistance that's come support at around this level. But I really like the falling wedge pattern. It's been good for me in the past. What to do? Well, simply observe it, folks. You could wait for it to turn to a buy. That would be a good place to get in. But I think that if you see it breaking this top trend line and the gold price, as I say, closing above 1922, then there is a high probability low risk trade there. And I have to just keep saying that with gold, folks, if you get in and you're wrong, you just have to run for cover, because one moment's weakness can cost you a great deal of money. Again, the reward in this is huge. That's £6, that's 18, so we've got a £12 to here. That would take that to 25. VectorVest valuation is 29. So for once, the technical the technical projection and the fundamental value saying pretty much the same thing. So as I say, I have one bet running, which is the bet on the American market, the GDX. I'm waiting patiently for this to confirm. In other words, that the probability of this last leg down goes away. When it does confirm, then we've got one blue chip gold mining stock and two marginal mines for your consideration. I hope you found this useful. Thanks very much.